We're here for financial freedom, right? We were investing in silver and gold for financial freedom. So make sure you become financially free in this bull market, no matter what you have to do it. Welcome to another episode of the Kinvestor Report, where I chat with industry experts to discuss the market, commodity, stocks, and the economy. I'm your host, Arlen Hansen. As always, this interview is not investment advice, not a professional advisor or geologist, blah, blah, blah. However, I've been investing in the kicking rocks for over 24 years, visit sites around the world, and certainly taken a bath or two in the market. Do not follow my lead. Any financial interest or I have in the companies mentioned in today's interview will be disclosed, so be sure to do your own due diligence. I will certainly disclose that I own stacks of silver, and we're going to be talking about silver today. Today, I'm excited to welcome David Morgan to talk about silver. We've had him on the show before. He's a leading voice in the precious metal space and publisher of the Morgan Report, macroeconomics, and the author of the Silver Manifesto. He advises hedge funds and investors globally and is a familiar face across the major financial media, sharing his insights in honest money and sound financial systems. David, welcome to the show again. Thank you so much for showing up. We got $110 silver. Can't think of a better day to have you on the show. How you doing?
I'm doing well. Thank you very much.
Yeah. All right. What a run. Okay. So let's just talk about where we are. Like, how do you manage this now? And where do you think we're going? Is there a pullback coming? Like, I was just at the show. There was zero bearishness, which makes me nervous. We're starting to see the headlines, which is typically a sign of short-term tops. Where do you think we are?
Let me give you a background, and thanks for inviting me. It's been a while since we've been together, and I know you just came back from the VRIC, the Vancouver Resource Investment Conference, and shout out to them. Shout out to Joe Martin, and Jay has done such an excellent job since he
Totally.
took over, and I just really, that one is really dear to my heart because uh, that VRIC conference was kind of the first one that I really got, let's say, more and more enthused about the resource sector and gold, silver, and of course all the assets that revolve around resources. But and also Joe was one of the first ones that kind of like gave me a chance to
All right.
okay,
Right on.
get on stage and say, okay, big boy, go ahead, and very carefully, which any promoter should do. I mean, you just don't know who you've got. So anyway, big shout out. Hope everyone had a great time. So let me give you a little background and I'll answer your question. First of all, I think silver is catching up. It's not repricing. I mean, if you listen to anything from Michael Oliver, big shout out to Michael. Great work. I had him on, interviewed him. I don't know if he's interviewed me, doesn't matter. A few times. But, he talks about what myself and others have talked about silvers. What if you want to use the word manipulation, managed, suppressed, whatever words you want to use. I mean, I have very little argument with the people that says the price wasn't under control for some time. It was, and I put something on X like 8 statements of fact showing lawsuit, jail time, all that stuff. So anyway, I digress to come back. So again, silver's not catching up; it's repricing. As far as I'm concerned, we may still be in the repricing mode. It's reacting not to gold, but it's being repriced as a strategic metal. Remember, the silver strategic metal moniker was on silver up until about 1986. The strategic stockpile from the United States was 139 million ounces, and that is what was used to start the Silver Eagle program. A senator or two got together and says, well, what's silver? What's all the silver doing over here? You can buy silver anytime. It practically rains silver. There's so much silver, right? So it ate up. That's what started the Silver Eagle program. They went through it, minting Silver Eagles. Officially, it's called Silver Liberty, but regardless, referred to as Silver Eagles. Ate up that stockpile of silver over years, and the mandate was to source silver domestically. So in other words, you could only use silver that was mined from the United States for the Silver Eagle program. Well, the powers that shouldn't be found out very quickly, Arlen, that there wasn't enough mined silver in the U.S. to even do the Silver Eagle program. So they had to change the legislation. But I want to emphasize that point because oh, well, we'll just, we'll put a tariff on our silver and be big shots and we won't export it. We don't have enough silver to make the coin program, for crying out loud.
Yeah.
So we import almost all of our silver because we need it. So does everyone else. Okay, so it's
Where was
repriced.
it coming from back then?
Oh, well, wherever. Mexico
Okay.
primarily. It's the
Probably. Yeah.
easiest
Yeah. Yeah.
trading partner. And you guys, Canadians, I mean,
That's
it's
good,
interesting.
Canadians.
Well, you bet. So I would say, is the supply chain broken? Or maybe better question is the supply broken permanently? And I wouldn't say that. But we've been at a structural deficit for multiple years. Over 70% is a byproduct of other mining. And there is no silver shale revolution. In other words, there's nothing out there that, oh, we're going to get a lot of silver from X. Now, a lot of people think that, grandma's going to sell her candelabras and that you're going to sell your, silverware and that kind of thing. That could and probably to some low degree is taking place. But you told me we're going to talk about silver. I have my cup of coffee and I'm going to roll until you interrupt me here. There was a study done. It was called Charles Rivers Associates. I have it back here in the bookcase. And that was a commissioned study by the Silver Institute after what I'll call the great repricing during the Hunt Brothers era. And this was a few years after that. And what Charles Rivers Associates determined from their independent study was that what I will call the great melt had taken place. In other words, there was about a 6-month, at least, backlog of candelabras, tea sets, silverware, and all that. Now, I'm not saying there isn't more of it out there. I am. But what I'm emphasizing, according to that study, and I choose to believe it, probably the lion's share of it took place. And if you think $100 silver is high, which it is, I mean, nominally, it's an all-time high as we're speaking, and I'm excited. But if you put that $50 spike high of 1980 in the context of an inflation adjustment, it isn't an all-time high. But at that time, that $50 was like, I don't know what the equivalent is. If you use John Williams, it's like 600. If you use the CPI that's official, it's something close to 200, I think. The point being is that people said, holy smokes, this is insane. And even when it pulled back into it jumped all over. You look at the chart, but people lined up, smelters backed up. So my point is, I don't think that there is the readily available, oh, get grandma's, tea set, let's melt it down. I don't think that's as available as a lot of people think. That's what I'm trying to state. So the last one, and I'll give it back to you because I don't want to lose you. Just keep rolling here. But the industrial demand is price insensitive. And this is what's causing this market to just go almost straight up. As I've said on other programs, but it's probably the key point if you're going to take anything out of our discussion, is the fact that the industrial users, in almost all cases, the price is price inelastic because the amount of silver required for the end product is so small relative to the cost of the end product that it's nearly meaningless. So if you have $10 worth of silver in a $2,000 refrigerator freezer
or device or something,
price goes up tenfold. At $10, it's now $100 on a $2,000 item. Now the manufacturers will make an excuse, or some of them will. And we had to up our refrigerator because it uses silver, which isn't a lie, but it's infinitesimal relative to the total cost. So you got solar, EVs, AI data centers, military, electronics, medical equipment, and silver is not an optionality. There isn't many substitutions.
Well, yeah, I was actually just going to ask that. Is there a price where something else just kind of says this makes better sense?
Yeah, now I try to keep that, I don't like to use the aluminum foil hat very often, and I'm not going to put it on. I'm going to put on the Stinson, I'll go on the Yellowstone channel for a moment here and be grounded. Yes, there are some. Graphene can replace silver in some applications, but it's more expensive
Well, you can't even, is there any commercial production of graphene?
There isn't anything that can do it right now.
Right. Yeah. Okay.
I'm always a little hesitant because Arlen, discovered why Jerome Smith, my predecessor, one of the silver guys back in the Hunt Brother days, talked about $200 silver in the mid 90s in 1980. So he's projecting out like 15 years and said we get $200 silver. So you put that in the, today's
Dollar.
inflated money. I don't know what that comes out. It's a big number. And I think he would have been, and I'm saying would have been correct, but he wasn't because technology changed in the mining industry. Because of that fact, we started mining one heck of a lot more silver than we had in the previous 60 years. So I was always cognizant of, a technology can change this dynamic literally overnight. I mean, it might not change like you get a lot more silver overnight, but you could project, oh my goodness, we're able to capture, instead of 60% of the or 100% or whatever. So I'm cognizant of that. That's what I'm trying to say. So let me give it back to you. I've done quite a rant and probably didn't even get your question in there yet.
I said, I guess I was asking what price does a substitution make sense? But it doesn't really sound like there is a real substitution for silver. You
Yeah, I
said
mean,
maybe,
where
yeah,
you
you said
really,
graphene, like whatever, but like there's no
yeah,
commercial graphene production out
there
there.
would be. I mean, first of all, one of our peer group has talked about, using copper and solar panels.
Mm-hmm.
Um, and I explored that at certainly not a deep dive, somewhat more than a cursory level, but looked into it. And that's a possibility. I mean, I've been hearing about copper and solar panels at least 10
Well,
years ago.
hey, we got $6.50 copper now too, so I don't know if that's
Yeah,
really makes it, if it's really a substitute on value,
yeah,
right?
exactly.
It's
So
nuts.
where you really would say, sorry if I interrupted, where you really would say, oh, well, let's substitute it is where it's really high demand, or let me say high usage relative to the end product. So I just spoke about price insensitivity in almost all industrial demands,
Hmm.
but it's direct in silverware, right? Oh, well, silverware or silver jewelry. So let's talk about those very briefly. Silverware is about 4% of the market. So yeah, it's
Do people buy silverware anymore? Like that was what my
not in
grandma
the
my,
not
what
North
my grandma
America.
used to buy, right? Like my
Not
kids are certainly not buying silverware.
like I'm up there in age, and I've been to many, many weddings in my life, and even some, above middle class types. I mean, some pretty, not that I know that many, but I've been all across the board at weddings. And so people at the higher end that might put silverware down on their, I forget the name of it, but what your wish list for the wedding. None of them,
Yeah.
zero, ever wanted
Zero.
silverware.
Yeah.
However, in India, it's still at the higher classes.
Okay.
It's sought, but so it's a very teeny market. Really doesn't affect it much. And then silver jewelry. What's interesting about silver jewelry is that even though it's a direct cost, I mean, if you're getting a silver bracelet, pennant, ring, earrings, whatever, they're going to cost more. Silver's gone from 50 to 100 here rapidly. However, what's interesting is the psychology behind the jewelry industry. Like, you know what? Silver's a lot cheaper than gold, and I'm proud to wear it. Before I
Yeah.
was like, yeah, I was just one of the mill, but look at how much silver I'm wearing. So that's
Hmm.
a little bit of a psychology thing. So I don't want to go too deep, but I really enjoy talking this market, especially buzzing through 100. I actually thought we might falter around the psychological 100 level. We've only been there for a few days.
Like slice through butter. It was just like,
Yeah,
oh.
so we might see it, close at 99 today. I don't know.
Yeah.
But I did expect some resistance. It's really too early to say, but it looks like it's not. It looks like silver's just going to march on. So I think I've covered that. So there's all these demands, but the one that's really the most important right now and has been driving this market is the industrial demand for physical commercial bars. And that demand has not been met. The reason we know that is the delta or the differential or arbitrage opportunity between the Far East and the London and New York markets. So as long as there's that, 8, 10, $12 spread, until
Hmm.
that equalizes where silver is universal, the same price, you know, worldwide. Until that happens, we haven't reached an equilibrium point. So that's something to look for. Could we see a crash with that delta in place? Yes, we could. It's possible. But right now, what's driving this market, the best that all of us can tell, is the amount of physical demand coming out of the Shanghai Metals Exchange / the futures exchange. So we'll see.
Yeah. Okay. So yeah, let's talk a little bit about that. So like I was at the mining show and yeah, shout out to Jay Martin. Like that show is awesome. Um, uh, very little, like everyone was so bullish, David. Like you could not find a person on the floor that was like, no, silver's going lower, gold's going lower. And like, I believe we're in a structural bull market for a long term, but like no one was thinking it was toppy. Like it just had to keep going and keep going. Uh, so that makes me nervous,
Mhm.
right? Like we've had such a run, right?
Right.
And so yeah, like what do you think of that? Like, do we think we have
Well,
some sort of like some sort of correction at some point? Like like all the arguments were kept on being said. Oh, it's different this time. Like all the same things I've heard at every top was being said,
sure.
you
Yeah.
know? So like, but it
Yeah,
does
no, I
feel,
am.
like it's just
I am. I mean, first of all, um, last month's letter, it seems like a long time ago, but roughly 1 month ago. For my premium members, my paid members. I mean, a lot of these people trust me as they should, but I'm only human like anybody.
mhm.
So anticipating, a top, and I've been lucky, skilled combination at calling every major top in silver from the early 2000s up until now. And what I did was I put out two PDF files for a different price silver, 100 and 200. And it may go to 500. I don't know. But what I did indicate at the $100 level, which I predicted we would see $100 silver back in 2003 before there was a silver ETF, before there was AI data centers, before the PSLV. So anyway, I thought it would get that price. And now we add on all these new things that might, rethink it. Okay, it could go above 100. Regardless, what I said is in a parabolic move, and having been very seasoned as a commodities trader at one time, you don't want to go parabolic and not capture your profits in the strength, because once it turns and starts coming down, sometimes it's a lot more difficult to get out. So I put out two files and I said, okay, here's how you filter out into the $100 level. And if you think it's going above it, here's how you filter out to the $200 level. And of course, I always in these two emphasize keeping, a good chunk, like the last 20%, don't sell basically at any price. However, the main point, now I'm getting to it now, is if and or when, I really should say when the market does peak, then you learn to sell on the way back. So silver peaks at, let's say, theoretically 155. So it didn't
I'm
make the
calling you on that, David.
200.
I'm calling you on that. 155 is the top. Kidding.
so, so as it comes to 140 and it stays, it's trading, but it's coming down. You look at the 10-day moving average, 10-day moving average. It stayed below the 10-day moving average, which is 140. Sell 20%. Now
Mhm.
it's coming down more, and it stays at the 20-day moving average of 126. You sell, 20% more. And the reason I outline that is so many people, especially people that have been in this market a very long time, such as yours truly, me, you don't want to do a round trip. You don't want to get all excited, watch it go to 50 to 155 and back to 100 to 50 and not taking a profit. I mean,
Yeah.
that is not what in this market.
Drinking your own
Now,
Kool-Aid sucks.
yeah. So it's just not. So that's the main thing is, yeah, selling into strength is always smart in any commodity, cotton, cocoa, or silver. But it's more important to have a plan if we peak and when do you get out on the way down? Because, oh, I missed the peak, I didn't get 155, David sent it to Arlen. I should have listened to him, whatever it is
Yeah.
that you lock in a profit because you're, a lot happier taking, silver at, let's make up a number, 126, as I just said, than watching it come all the way back to, the 50. Now, is it going to do that? I don't think it will.
I don't think it
And I'll
will.
just go on here for a moment. And you can, give me your feedback. But if you look at the last big move that was of substance, it was the 1980 move because silver in 79 was at $6 silver temporarily for minutes was 80, excuse me, in 1980 was $50, 8.5-fold increase. But it repriced, and the average price for the year, depending on the data, Silver Institute says 20, I think CPM says 21, but it leveled at $21 the ounce. So I want to emphasize this, Arlen, because here's the deal. If the all-time high was 6 in 1979, but the average was 20 in 1980, the average price for the year, now we get a little bit of a feel for what we might see this time around. We might see that 150, might see that 200, and it drops to, I don't know, pick a number, 100, let's 133. We'll get all the 33 freaks. 33 means something in masonry or something. I don't know. Anyway, so it's 130, and that's the average price for 2026. I wouldn't be unhappy to sell. Now the other problem is, well, David, wait a minute. You hate fiat. You've taught us about the banking system. We know these guys are scallywags, and why would we put our money
scallywags?
And that's the deal. I don't want to, but I can't. There isn't a one size fit all. And we're looking at oil stocks. I've teamed up with another great Canadian up there. I won't name him, but he is very, very seasoned, and just he knows his stuff. And it's just easier for me to tell my subscribers about him, and hopefully I can get a discount on his newsletter. But I just don't have the time or the energy to do an energy letter on top of what I'm already doing, especially as hectic as things have gotten. But oil right now is very cheap in terms of silver. Platinum is actually cheap in terms of silver. And that's what I've always said. I don't know if Mike Maloney said it first or I did, doesn't matter, but you don't want to price in terms of dollars, really. You want to say how much silver does it take to buy a house? How much silver does it take to buy a car? How much silver does it take to buy a barrel of oil? And you want to find out where your silver is purchasing something undervalued, and that's oil and platinum right now. Of course, there's always real estate deals, but anyway, overall, I wouldn't buy. And it's personal preference. I mean, if you've had your eye on, I want to buy this ranch in Montana. It is my life dream. I'm going to buy this ranch in Montana. I'm going to pass it on to my children's children's children, and you can do it with your silver profits. Then do it. I mean, that's the reason we're in this market.
Totally, yeah,
and
100%.
So let's go.
We're here for financial freedom, right? We were investing in silver and gold for financial freedom. So make sure you become financially free in this bull market, no matter what you have to do it.
Yeah, that's right. So
like I actually sold a lot of physical silver on Friday just to take a bunch of cost off the table. And now I'm sitting on a ton of it, and I can let it ride.
Sure. That's the other thing. Well, I think Rafi Farmer, I mean, so many good people in the silver space. I mean, Bix Weir's been around almost as long as me. The late great Ted Butler, unfortunately, isn't here. David Smith, my co-partner, he's gone. Some of these people that I wish could see the $100 mark are no longer with us.
Yeah.
But taking something off the table is definitely smart, and that's it. I mean, well, I think Rafi, I don't want to put words in his mouth. One of them said, "Look, you can do what I've taught about the junior miners. If you get a double, sell half and pocket your original capital back and ride the rest for free. It's really not free. You pick the stock and it doubled, but nonetheless, you get my point. You can't lose in that situation. Yeah,
can't lose.
Protect
Protect yourself.
Fiat, but fiat still works. I mean, it's going to work until it doesn't. I think it's going to work until they transition to a new system. But some people think we're going to have an absolute failure, and that's possible. I don't rule it out. But it's very exciting times. But again, and I think you said it best, I mean, we're here for financial freedom. We're here to better our lives. We're here to make lives better for our family. Or if you're, big hearted and want to start a foundation or charity or, whatever. I mean, that's the purpose of it, to keep our lifestyle equal to or better than it was before, for ourselves, for our families, for our corporations, for our businesses, for our friends, for our church, for our community, however you want to do it. And that's an individual choice. So I cannot give a recommendation that fits everybody. A lot of the younger people, and I mean, the 40s or whatever, I mean, it could be a 20-year-old, but, it's like, I still want to be invested. I've got, 20 years, I think, until I retire. I need to reinvest these profits. Where do I go? And right now, primarily that's in the energy sector.
Yeah, I've been picking away some of the energy stocks too, to be quite honest. So we'll have a different chat offline about that one too, to kind of share some names and things like that. What do you think the biggest misconception about this latest move is?
I think the paper market's losing control. I don't think that unless you're, a silver or gold bug, you understand what's really going on. I mean, the COMEX and LBMA are pricing venues, not supply venues. And that's the problem. They've been a derivatives market forever. And that's how, the silver market works. I mean, you look at some of the stalwarts on the more establishment side than yours truly, they'll tell you how the silver market works and they'll tell you it's a derivatives market.
How how
So most
how short?
deliveries are, the problem with some people don't understand it and a lot do, but there's a lot of title transfers. I mean, for example, there's someone that put out and it wasn't just one, I don't think, but regardless, there was someone talking about the drainage of the COMEX and putting out these massive deliveries. And I went through that briefly for my weekly perspective, which is for free, and I went in depth for my premium members so they wouldn't miss the dotting the I and crossing the T. But they were talking about these massive deliveries, and the implication, the way I heard it, so it's me, uh, my interpretation was, well, the COMEX is being drained. Well, actually, the COMEX January 2026 was 100 million ounces more physical silver than January 2025. So if we're draining the COMEX so badly, then why is the actual amount of physical silver up 100 million ounces? And the answer to that is both are correct. But most deliveries are just title transfers, not metal leaving the
Actually,
vault.
oh yeah, of
And
course
most
not.
people that follow me understand that.
Yeah.
I don't know if everybody gets it or not. I'm just trying to make it, for the record. I mean, look, I'm a trained engineer. Um, we are taught if you get a degree, which is not that easy, um, you can't help but think logically. I mean, you're trained that way. You have to. It's not opinion. It's not subjective. In the engineering world, when you build an automobile or an airplane or I don't know, tool design for a tool that holds the robot that welds a car apart. It's got to be exact. There's no ambiguity, no argument. There's no, well, I want it like this. So in that structure, it's clarified my thinking. And I used to say in my bio that I thought that having that kind of a background clarified or cleared my thinking economically in a different way than most trained finance majors, which I also am, but that was after I got my engineering. So it's paper markets losing control. The derivatives markets are just that. They're not supply venues. Most deliveries are title transfers. The moment large buyers demand unencumbered metal, the paper credibility starts to collapse. And again, that's what's happening right now. This is how silver disconnects, not overnight, but suddenly. And that's been the case for what, the last couple of months, I'd say.
Yeah. What do you think? Do you think there's an argument that the silver stocks haven't really caught up to the price of silver yet? Like we saw
What
that
do you
with gold,
mean?
we saw that with gold, right? Like the gold stocks were like gold started going like this, and
Oh, the
gold stocks
stocks.
is
I
like
was thinking stocks. I was
finally.
thinking inventory of
Oh
gold.
yeah, yeah, yeah. Like
Oh,
so
they
finally in
haven't.
the
No, I
last.
mean, look at Rick Rule. I mean, I haven't spoken to Rick in a while. I had him on my mastermind years ago, and it's funny when I had him on there because uh, when you get down to the nuts and bolts and do what I would consider a deep dive from the mastermind group, he and I think a lot alike. Uh, and that's good or bad, I guess. But so Rick, I guess, sold a fair amount of his silver around 75. I haven't listened to the interview yet, and he's moved it into the mining shares, which is actually pretty smart because you're buying silver at a discount if you're buying the miners right now.
Yeah.
The stocks, the equities, I'll call them, were are pricing silver at $50 or thereabouts rather than $100 that it is. And silver could drop to 75 and stabilize, like we talked about. Silver going to from 6 to 50 and stabilizing at 20,
Hmm.
still threefold above the breakout or the all-time high. So uh, we could definitely see that. In fact, I'll be writing more about that in my next report. I'll be talking about, if you're worried about, the price coming back strongly. There's these oil stocks that you could consider. You could consider buying more miners. I always am going to advocate having a physical metal first. I mean, it's
Feels
one of
good
the
to
most liquid
hold.
ways,
It just feels good to hold.
yeah.
I got five
But
silver coins right now in my pocket, literally, and I just love playing with them. It's just awesome.
yeah,
If silver investors get one thing wrong consistently, what do you think that is?
well, boy, that's a tough one. It's hard to think. I think, um, I don't know. I'm just going to ramble on. Maybe I'll get something. I think one of the things would be that it's not just money and it's not just an industrial commodity. It really does both jobs. There's really some wicked smart people out there that silver's just industrial. I don't agree. I mean, the word silver and the word money is synonymous in the Romance languages. The Coinage Act, I think, is called of 1792. I mean, basically, the monetary aspect of silver is still there. It'd be stupid to do, but I could take a silver dime in the Walmart, buy something that came out to be $212.10, give them, Federal Reserve notes of 212 and put a mercury dime, which is silver, on the counter. The cashier probably wouldn't think twice and take it, and it's legal. I've used it as money, and it
Mhm.
is money. But of course, that dime's worth what, $7 now or something? Fiat bucks, Federal
Yeah, yeah.
Reserve notes. But it's money legally. Is it money economically? No. Why would I put down something that says 10 cents when it's worth 7 fiat in today's environment? But nonetheless. So anyway, I don't want to get too much in that. I think that's one. The other one, I think, is the belief. I mean, a lot of my followers are in disbelief that we actually hit 100. Yet I put in writing back in my first book and get the skinny on silver investing, and it looked like it. But when I wrote that book, I forget what the price was, but we went from 5, and gold I remember better, actually, the price, but we went in gold from 252 was the low, and I don't think we stopped until 2011 at like 1900 or something.
Yeah, ish.
And
Yeah, yeah,
and
yeah.
and
I remember
you
those
know,
years very clearly.
and silver was very similar. And so as you're reading the book after I wrote it in 2004, 5, 6, 7, 8, and you're thinking, yeah, we're on our way. It just keeps every year it's going up. And it did for 11 years. Gold in particular. Silver didn't get a new year over year high every year. Sometimes it was off somewhat. Gold did. Gold for 11 consecutive years, year over year, each year, January 1st was higher than the previous January. So anyway, I wouldn't know. I mean, I really don't know. I think that there's a lot of not understanding how the derivatives market works, not understanding how these huge deliveries are just a change of title, not understanding how difficult it is in a true arbitrage situation to move physical metal, although it does, not understanding the insatiable amount of silver that's required for money, because if you do have a currency failure, then you have an infinite demand. Because
Hmm.
if you know that your money in your bank account is going to be zero, you're going to buy anything that you possibly can that has value. Jars of peanut butter, cans of tuna. You're going to buy balloons. You're going to buy anything that you can. Of course, what do you really want? Well, you want the ultimate money, which to me, the ultimate money is silver, not gold. Why? Because it's more useful. That dime of silver, that's 7 Federal Reserve notes, is a lot smaller unit than a 1/10 ounce of gold, which is almost $500, right? So you got a dime's, quantity of silver and a dime's quantity of gold, meaning the mass. And one's 500 and one's 7. Which one's more practical for day-to-day use for gas and groceries?
Yeah. As you were answering that question, one of the thoughts that kind of came into my head is actually, and maybe this is not with silver investors, but investors generally, is not believing their own conviction. Like, you know what I mean? Like they come up and like, oh
Yeah,
my God, this is such a good idea. And then when it actually starts working, like it's like too good to be true, and they sell and they get out too quick. I actually think
yeah,
that like I think that Vancouver, I say Vancouver just because we're the early guys, right? I think 90% of Vancouver will be out of this market before the last leg. And that last leg is where the huge money is going to be made. The massive money is going to be made. But I think it will shake out 90% of Vancouver until then.
Well,
Right.
that's
So
interesting you say that. So I want to just emphasize that in the book, the last one that David Smith and I wrote called Second Chance, how to make and keep big profits in the coming gold and silver tsunami. Folks, we're there. There's lots of techniques in that book, but one we call it the sacrifice fly. So
what's
you're
that book
out,
called? Sorry, what was that book called?
second chance.
Second Chance.
And the subtitle, there's a lot of second chance books. In fact, Robert Kiyosaki wrote one called Second Chance. If I would have known that, I would have asked David to change the title. But anyway, the subtitle's the title really, how to make and keep big money in the coming gold and silver tsunami, I think is a subtitle. In that sacrifice fly chapter, what we suggest is that you don't want to miss the top. Nobody does. But if you're more or less out at $200 silver, let's say, and it spikes to 500, you could take, just like buying the mining shares, you could buy, some call options way out of the money, and you've got so much profit, you could certainly afford to gamble at that point. So you buy some out of the money calls. And if silver does hit that, you're still going to benefit from what we'll call the ultimate peak or close to it. So there's something you might want to consider. The book's still available. I don't know. I don't think it's been printed. I'm thinking about reprinting the Silver Manifesto.
Probably be a good time.
Yeah.
Right.
But I want to emphasize a couple more things, just kind of what we did, because I did make some notes on this to get back to the previous question about, kind of what's different, what people are missing. So this isn't 1980 or 2011. Those were liquidity spikes. This one is a systemic repricing. Silver's needed for industry. Industry sees they may run out. They're buying and stockpiling silver to make sure they stay in business. Back then, inventories existed. Today, they do exist, but they're being, let's say, bought up, as I just said. Back then, silver was an optionality. Today, it's embedded in infrastructure. Without silver, no computers, no cell phones, no communications, no war,
No
nothing.
drones, no battery. The list goes on and on and on.
So the floor is higher. I'd say the minimum floor is 50, and the ceiling is still undefined.
Undefined.
So even, if silver went back to 50 and I liquidated most of it there, I'm always going to keep some. Would I be unhappy? And the answer is yeah. I'd hate to give up half of my profits, but still, my average price is like 30 something or a little below. It's not going to be the end of the world for me, but still, I just want to reemphasize the floor is higher than ever and it's reestablished, but the ceiling is still undefined. Now it might be defined.
Good point.
Today. I doubt it. I really do think what you said, and I want to emphasize what you said, Arlen, because it's important. I think a lot of us, it could be me, it could be my, my premium members, and I've done my best and called the top. I got it right again, so to speak, and that top holds for 6 months, and then something happens, and silver gets repriced again because of some criticality or whatever, and it goes even higher. The reason I say that is it could happen at a top. I can't think of and I know markets pretty well. I don't know everything, never said I did, and never will, but I try to learn something new all the time. Trying to think on a top where that's happened. Probably could talk to Michael Oliver, he might know. But I can tell you on the bottom. I called the bottom in silver at 18. Said, this is it. Go ahead and accumulate. And the bottom was 18 for well over 12 months. I was correct. I was right, and I was right. And I always pat myself on the back because the market has humbled me more than once. And then there was that day it went under 18. I forget where it went. I think it was the illness thing. It dropped to I forget, 14 or something like that. I know it was under 18 because I bought during that time. But my point being is you might get a top and it kind of levels off and then it spikes again. I wouldn't rule it out. I just want to reemphasize what you said. We might, get out early, but as the old adage goes, two things to say. One, you never go broke taking a profit. And you
Mhm.
may or may not recall Jim Dines. I mean, I'm old enough to.
He's like massive influence in my investing
Yeah, I mean,
strategy.
Jim
Massive
is
influence.
actually, yeah, Jim actually influenced me to become a
Yeah.
financial.
Yeah. That Fear and Greed book was just awesome.
Yeah,
Yeah.
no, he's great. So to quote Jim, and I'm glad I learned it as a younger man because it kind of set the record straight. Because as an amateur, which I'm not now, definitely a professional, but regardless, well, I think about not getting the top or close enough to the top or whatever. Jim in plain English said, "Love what you get because it's all you're going to get." And I always remember that quote because if you sell your silver at 75 and it goes to 150, love that you made a profit. You averaged
100%.
25, you tripled your money, which is hard to do in any market, and be happy with it.
Yeah.
And going back to the earlier part of the conversation, you would imagine that my kids have gotten silver coins for their birthdays and at Christmas. I mean, I give them other stuff that's silver,
They probably rolled their eyes like, oh, dad,
but
silver again.
so my oldest daughter, I was over visiting my granddaughter, and silver had gone a little past 50, and my older girl said, "Dad, she just says sold it all." She said, "We sold some." She goes, "We sold some of our silver." That's fine. It's your, if I give something, I give it. I mean, I'm
Yeah.
not sitting there, controlling anything. I mean, if I give it to you, you throw it in the lake and make a wish upon a star and throw it away. It's okay. It's your silver, right? But
Yeah.
I just thought it was interesting how she was kind of meek about it.
Yeah.
And she didn't even ask me if I thought it was going higher. And then I guess I have to add on the story. Sorry, but my niece, one of my nieces, um, her dad, my brother-in-law passed away. She got an inheritance, and so did her sister. And she bought land, mostly improved duplex. Very smart investing. She did good and stuff. She understood a little bit of stocks, and she asked me. I said, "Well, I think you should hedge some. Buy a monster box." So she bought a monster box around, I think, $30 an ounce. And relative to the size of what she had as investments was, I don't know, was certainly not 10%. It might have been 1%. But every year or so, she'd whine and cry. Silver doesn't do anything.
Yeah. Yeah.
So
Yeah. Great,
she lives
great impersonation too there, Dave.
so she sits there and she's complaining again. And so she lives in Oregon, and one of my other daughters lives in Oregon. So I had my niece take it to my daughter, and I bought it from her. And I thought to myself, this has got to be it. This has got to be it. This is when my own family says, "Oh, the heck with it."
Oh,
And
your whole
honestly,
family turns on
that's
you.
about the time it took off.
Oh man. Okay, Dave, I want to get into some stocks. Do you mind? Can we talk about
Sure, go
some
ahead. Yep,
ideas and
that's
some
fine.
names?
Okay.
Who are the best operators out there in silver producing companies?
Yeah, the best things that we've done and why I think I stayed alive during the very much of a bear market or a challenge to, from the 2012 high to, up until recent times, um, were the streamers. I mean, the best one you can own now is probably the one that's the biggest capital appreciation on the list. Wheaton Precious Metals, formerly Silver Wheaton, because some of their streams are still at $5 silver. So they made deals at $5 and it's 100. Think of what the margins are there. So that would be one.
Yeah.
Um, the other one's Agnico Eagle, Canadian company, one of the best run mining firms out there.
Agreed.
Royal Gold was really, really undervalued at one time. It was on the list. I took it off. Nothing wrong with the company that took it off. It's just a duplicate of a very much similar to another one out on the list. And I like long lists. I like rifle shots, not shotgun shots. And so took it off. And then it got so undervalued, I put it on. So a lot of my new, members were able to get like a really juicy pick. And that stock, I think, has almost doubled since I put it on back on the list very, very recently. Oh, I'd give you three. I mean, we only have like six in the top tier. Then we have mid tier. I mean, Cisco royalties, uh, Fortuna. I mean, a lot of these things, I was sitting there at the phone and I've got the alerts, on these
Yep.
companies because, it's my job to follow these for the readership. And they're not all silver and gold stocks, by the way. I mean, uranium, some of them are up 500%. Um, Lithium stock we picked is not doing well, but it's in the speculative
That,
side, so it's a small
uh,
amount of money. We still have copper, uranium, lithium, um, and the silvers are silver, but they're also silver, lead, zinc, copper. I mean,
is there
most
like how
of
many pure play silver plays are out there? Very
darn
few,
it,
unless it's
other
a
than
streaming
Gaia,
deal.
silver's about it. I mean, First Majestic had about the most direct exposure, and even they have been diluted, not diluted from share issuance, but more diluted because it's just there's no such thing as a pure silver play. It's very,
Yeah.
very difficult.
They did not pay me to wear this necklace, by the way. I just wore it on my own accord and representing Jade Martin for the VIRC. I think this Argentus silver looks interesting. Like the
Yeah.
AG, like I think they've had some significant grades and some big money behind the deal.
Well,
Um,
one that we've got, was Outlook. We've got Outcrop Silver,
okay.
and Ted was there, expected the whole thing. I mean, we still visit these properties in mid to lower tier, the junior explorers, and almost all those we've been on a property. Same thing with most of the speculations. I won't say every single one, but almost. So we really do our homework for
Yeah.
people that buy our service
Yeah.
because, as far as I'm
Good.
concerned, that's the only way to do it right. Now, Aya, which has been on the list, I've not been to Morocco, although I was invited, but we got some travel issues right now, but I won't go into that. But my staff can. Anyway, it's I still think if silver peaks out here or peaks out and comes back and averages out at $80 silver, you're still smart to buy the underlying equity because the price of the metal is higher than the price being issued from the equity side. In other words, let me say that more succinctly. We're still pricing silver at 50. If it stabilizes at 80, those share prices will eventually reprice to $80 silver because those profits will go to the bottom line and the stock market is not that efficient, but eventually it will reflect the earnings.
hmm hmm Dave, thanks so much for your time today. Love chatting with you. I've been following your work for so many years, like since I've been in the business.
Okay.
Right. So yeah, it's awesome to have you on the screen again. And yeah, we'll love to check in to see what this year brings for silver. Like it's just wild out there.
All right. Well,
Yeah.
let me just say that silver is about freedom, not just returns. Silver's always been the people's money. It
Yeah.
functions outside of the centralized control systems. And a world
Yeah.
moving towards CBDCs and financial surveillance, silver still represents optional sovereignty.
Yeah. Awesome. Dave, thanks so much,
Okay.
buddy. You have a great day. Yeah.
You're
Take
welcome.
care.
Bye
Bye
bye.
bye.